right, moving on. Renewable energy solutions platform Fourth Partner Energy has raised $275 million from global impact investors IFC-ADB and DEG in its third big-ticket funding round. The consortium's investment will infuse capital to fund Fourth Partner Energy's business expansion plans, which include a target portfolio of 3.5 gigawatt of renewable energy assets by 2026. To talk to us about the road ahead at Fourth Partner Energy, joining me now is its co-founder and executive director, Saif Thorajiwala, and also with us is my colleague Ritu Singh. Saif, welcome back to Startup Street. I believe World Bank's IFC is investing $125 million, while ADB is infusing $100 million, and Germany's DEG is at $50 million to complete this round of fundraise. What does the backing of your new partners mean to you? You also have, Norfund and TPG on board. So tell us, with this fundraise, what is the current valuation of the company as well?
Yeah, first of all, thanks, Shruti, for having me on the show. So our business model essentially is that, we build and own our own assets, renewable energy assets, and supply energy to our CNI clients on a long-term PPA basis. And this tends to be a asset-intensive, capital-intensive play. Right from our inception in 2010, our focus has been to bring high-quality institutional investors, invest in the sector in India and make them attractive returns. So this particular investment, which happens also to be one of the largest equity investments for all the three institutions, IFC, ADB, and DEG in the Indian renewable energy sector, is one step forward in that direction. We also have had, of course, like you mentioned, TPG and Norfund as our investors earlier on. In terms of the valuation, I would say that all the investors now are actually minority investors, but as a consortium, overall, they will own about 90% of the company.
All right, still not a word on the valuation, Saif. Hi, this is Ritu stepping in. You have an installed base of about 1.5 gigawatts of green assets, and you're looking to commission the first phase of your, wind solar hybrid project in Karnataka later this quarter. Talk to us about whether you're, one, on track in terms of the timeline for delivery, and secondly, the kind of impact you hope to make with these.
Yeah, we are very much on track. In fact, this is it'll be one of the, first of its kind ISTS project for the CNI in India. It's a fairly large project, even for us with the installed base of over a gigawatt. Essentially, what the initiative by Government of India to allow for ISTS projects for CNI, it allows us to do two or three, big things. Check the boxes. One is it makes India as a single market for us, because we can generate energy at the states where which are resource rich, essentially. So, for example, Karnataka is very rich in both solar and wind resources, whereas if our clients are based in states like Punjab or Uttarakhand, which are not having great wind potential, it allows us to supply energy from Karnataka across the country anywhere. The second thing it does is effectively allows us to supply energy to a lot of our clients. In fact, have multi-locational facilities, single clients spread all across India. It allows them to have greater flexibility in terms of, the energy sourcing, because they would be essentially sourcing it from one particular location.
Sure.
We're very much in track. Phase 1 should be getting done next month. And more importantly, we are also on track to complete the entire project by June of 2025.
Okay. Saif, that's good to hear. And like I mentioned earlier, you plan to use the fresh funds to expand your offerings, increase the supply to commercial and industrial consumers across India. Elaborate on these plans. And in fact, again, like I mentioned earlier, the firm targets a 3.5 gigawatt renewable energy asset portfolio by 2026. What makes you bullish? What are you betting big on?
Yeah. Essentially, like I mentioned, capital is a raw material for us. And the good thing about this round is a lot of it is going into committed projects. More than 50% of our business comes from, existing clients. And the, paradigm shift which has happened in the past, I would say 3 or 4 years, is it's not only about the cost of power. A number of our clients want a larger share of renewable energy. Most of them are signatories to RE100. They have taken pledges to go net zero by a certain year. and there is a big rush to meet those targets. So effectively, a lot of this 3.5 gigawatt is under the belt. The projects have been identified, and it is giving more of the same to our customers. One area which kind of stands out is there is a lot of hybridization which happens, which uses the complementarity between solar and wind in terms of generation. And we are also looking at providing round-the-clock power, which is effectively bringing storage into play and taking our clients net zero, in the near future.
Well, Saif, if you could quickly take us through your, growth numbers, what the financials look like currently, what sort of targets you have, both in terms of your top line and your profitability.
Yeah. So this year we should be clocking about 2,500 crores of revenue, and next year the plan is for about 3,500. So, about a 30-40% growth. In terms of our asset core revenues, we should be crossing about 800 crores this year, which is about $100 million EBITDA in terms of EBITDA. And next year we're targeting a 50% growth in our generation revenue. So that's how we kind of measure our business.
All right. Saif, India's renewable sector is expected to attract an annual investment of $25 billion through 2030, aided by the government's clarity and stability in the RE policy. The commercial and industrial consumer segment has been rapidly scaling up and attracting significant investments in this space. So tell me, what is the potential you see for FPEL going forward?
Yeah, I think where we are, we've just, scratched the surface. It's just the tip of the iceberg. Effectively, if you see, there is a shift, a secular shift from fossil fuel to renewable energy. A lot of our clients want to be in charge of their, energy destiny, and they want to source green directly from the source, and not from an intermediary, which utilities tend to be. So one is in the existing pie itself, they want more renewable energy. And apart from that, we are seeing some big sectors coming in which are going green. You take e-mobility, that will increase the consumption of electricity manyfold because you'll move from fossil fuel to electricity there. That sector will open up to take up more green energy. We have the green hydrogen sector, which will again be very, very promising. We have data centers, a lot of them, asking for green energy because effectively they have commitments with their clients. Say, for example, an Amazon or Google have made commitments to the end consumer saying that we'll be using green energy, and they have their own commitments to be given by the data center. So we're seeing, a two-way shift. One is transformation of the existing, pie into green, and these new high growth sectors coming into play. So I feel even 25 billion will not be enough.
Sure.
We will have to see a lot more coming through.
All right, Saif, we've completely run out of time, but thank you very much for speaking to us here on CNBC-TV18.
Thank you. Pleasure being here.